Welcome to the video. In this video, we'll talk about SOFI. We'll take a look at the daily and weekly time frame on the charts, see where I'm going to add, where I'm going to trim. We'll talk about my overall valuation. We'll take a look at the options market, what's happening there. We'll look at some SOFI news. In the meantime, my live portfolio results are there. You can copy me over on eToro. Enjoy. Okay, so the chart for SOFI looks fantastic, a little bit too fantastic. It's got a little bit ahead of itself, but we can't name that too much. It's looking great in our portfolio. So from the low here to DP up, I mean, we're over a 200% return in about 99 trading days, so we can't really hate that. SOFI gave us plenty of opportunity to buy it when it was down in the dumps, and we stockpiled a whole bunch under $10. Some of my older positions on this are up over 200%. Love that. I've averaged up quite aggressively. My average now sits over $10, which is $11.89. Do I think this is going to continue to go straight up? No, it's going to hit resistance at some point. I'd say it's fairly close to having a little bit of more of a consolidation stage. That could happen now, but I mean, I think we could potentially push up to that $28 mark where we've got the measured move completion, and then above that we've got the resistance here at $31. But psychologically, $30 is going to be big for this one. I don't see that breaking this year. Prices get a little bit extended. We'll talk about valuation in the news section, but for me, I'm not adding at these prices. It's getting too high. But I did make a little note here. I would love to add back under $20. Could get there if there's some bearish news. I know everyone's super excited that JP said he might cut. Well, hinted that he might cut. If we don't get a cut, this is probably going to be back under 20, and I would love to buy more. Again, I always want to reiterate, this is a multi-year position for me. I see this company achieving exactly what it said on the tin, breaking into that top 10 bank by market cap. And I think I put a post on Twitter saying that was about 2.5x the market cap that it is today. So even though it's only a couple of positions away from that top 10, there is quite a big jump up in size. And I am totally here for SOFI to do that. But looking at the chart, again, those numbers we just talked about will be resistance and support. We do have this kind of higher support here at $23, but primarily I think this volume shelf here, where we've had a little bit of chop, that's going to be the biggest support. And then below that, we hit that $20 and then the bull market support band. So all in all, we're working in quite a tight range. We'll look at the options market, see what the big boys are thinking. But for indicators, RSI is getting hot and it's staying hot. So I would expect to see either some chop or some cool off here, or probably a combination of the both, but neither is going to force me to sell. Again, if we look at what kind of drop that will be to the low we like, that'll be 25% drop. I don't really want to be trading in and out of that in this position. It is a bank. It typically does move slower. I mean, I'm saying that, but since kind of August last year, so in the last year, it has moved about 325%. That's not standard for a bank. I think that has only really happened because we're now starting to apply the tech multiple. It could be quite volatile next year as the tech numbers start to come through with Technisys and all that good stuff. But we'll have to wait and see. They have guided for those numbers to come through, and generally their guidance is bang on. As you can see, they always hit their numbers. Love that, and they're always very conservative. So I'm excited to see what they can do. Let's look at the weekly real quick though. I'll resize it here for you. Let's go. Let's just put 1 year up. I mean, it pretty much looks good. Measured moves look good here as well. We can see them a lot clearer what we're working with. We completed the measured moves for these two patterns. Even to the downside, it loves its measured moves. So SOFI, as a technical chart, does move very in line with its patterns, which I like. It makes it quite easy to predict. If I wanted to trade, take those swing trades. So if I wanted to do a 25% short on there, that could be a good one. However, I don't like shorting, so I would prefer to wait for it to pull back to that level and then add to it. I might trim a little bit off at this blue line or this green measured move. We'll see. It depends. If price chops around now until we get to it, then probably not, because it's going to have that cool off period. But indicators on this weekly looks hot as well. So again, that really gives us that confluence that it is getting a little bit extended. We know it's extended because our valuation kind of is a little bit lower. than where price is currently now, and then also the indicators are getting a little spicy. So probably on the next overbought, we might have quite a big pullback. But that doesn't mean things have to come down. Obviously, Palantir is a really good example of that. That the valuation on that is pretty high. The growth numbers they will have to put up for like the next 10 years are massive to be worth the price that it's today. But the chart keeps singing, so it really draws in that narrative. The MACD Plus looks good here as well, and the flow looks kind of flat, so not doing much. So technically speaking, the chart looks great. It is due some cool off, and we know that fundamentally as well, it's getting a little bit up to its fair valuation. It can run hot though, so always bear that in mind. Looking at the options market on this one, so the big boys, the institutions, what they're doing with the derivatives. We can see the levels don't quite line up with the technical chart that we are looking at, but they're in the ballpark. I would say if they're actually slightly more conservative than the numbers we're looking at. $27 resistance. That means market makers are going to want to keep it below that price to make sure they don't pay out premium for people that've got short-term long strikes on that one, long days strikes. Basically, anyone that's got a strike executing soon, they don't want to have to pay them a reward for having taken that bet. And on the opposite side, $21, they want to keep price above that, so they want to keep it in the range. Typically, if we look back here historically, they don't always do a good job of keeping this one in the ranges. So I wouldn't be too shocked to see some kind of pop above and then below, which would line up more with the chart numbers we're looking at. However, yeah, looks like they did honour it quite well there. Let me put that back on again. So yeah, so they did have a bounce quite nicely from 21 last time. Looking at the volume around strikes, we're getting quite bullish for action this week. However, we don't trade short term. So let's take a look towards the year end, what we're looking at when the market should be pricing in cuts by then, given the reaction to Jerome Powell's comments from Jackson Hole. So let's go January 2026. Got a bunch of people in the money. We like that. But nothing too interesting to look at. The market is not looking to make a lot of upside profit on this into year end this year. So that's something to bear in mind. So the institutions are already sitting pretty on that one. Let's push it out a year again. Haven't looked at this for a while, so this is all new. And not too much here. We've got a little bit of downside worry here. That could be some hedging, or it could be... That's quite a large position by the looks of it. Can I click on that? Well, let me open it. But typically that... A lot of downside on this could be hedging, given that a lot of people are fearing for recessions, and that is not good for banks in the short term. So keep an eye on this. The broader market on this one is not too excited about holding any position in the derivative market on this one, not for the long term, but that could be because a bulk of that move has already happened. However, the derivatives market on this one, I do want to point out, has never been exactly in line with our thesis, so that's something to bear in mind. It's always good to have them on your side, but they're not always right, and they can have big swings either way. So with that said, let's look at the institutional ownership, because that tells us a slightly different story about who's just holding long-term stock shares. So SOFI news, there is a lot on. Let me move this up here so I can see it a bit better. We do have the confirmation that we're now in the MSCI index. That's good. Some ETFs will want to be buying it up there. That does line up with the massive share volume. I think it was 37 million shares traded at market close yesterday. Or was it the day before? One of those days. I've lost track of time. Been a bit busy. But yeah, when that went live, that was crazy. Other than that, we did say when we looked at the derivatives market, we'd take a look at the institutional ownership, and that has had a big jump up as well. That is too early to reflect the new MSCI index being added to that, so hopefully we should see another considerable jump in it next month, but we're certainly ramping up with the institutions wanting to hold this long term, not just as kind of options plays, which is more short-term swing trading type style, more hedge fundy. Other than that, though, we've got our calculations. We base it's kind of a DCF model, but it's based more on adjusted EBITDA. That is because you can't use cash flow for a bank. They use too much of that cash flow for their loan books and stuff like that, even though they are moving to a kind of the loan platform business where they only take the fees and they shift the risk to another company, which I love. And that's going to expand hugely over the next few years as well, hopefully more into more home loans, more student refinance and all that good stuff. But I did change my kind of thesis around this. Now, I built my model here really, really sandbagged, and given all of the tailwinds coming that are going to boost this, I wanted to be a little bit more bullish. So I took away my bear numbers on this one, which sounds quite intimidating, but given that these are really, really sandbag numbers anyway, I was quite comfortable to do that and move to a base bull kind of probability weighting of half and half of each. So my probability price limit is now $28.68. That's only 9% kind of below where we are now, so it does line up pretty well. That said, to me, this number, this is the price that I'm not willing to pay above. As soon as price goes above that, I'm not going to buy any more until we get better numbers. And given that this is based on full year 2024, it's going to be a while before I can push higher on that one comfortably, because that gives me my risk buffer. I didn't do trailing 12-month on this one, just because how the numbers. It makes sense when I look at my model, but it's pretty hard to explain. However, if price does fall back, that gives me that margin of safety and gives me the confidence to buy again. Will it happen? I don't know, but we talked about it when we looked at the technical chart, though the levels where I would like to buy. If we go back under 20, massive fan of that. That gives us a lot more upside again and a lot better risk reward profile. Will it happen? Don't know. But that is my dream scenario. But either way, this is going to be a core position in my portfolio for quite some time. I love it. Can't get enough of it. The business just keeps pumping out good news. There's product launches going on constantly. Keep seeing it on the interwebs. Hopefully we get more on the crypto related stuff as well, but a lot of the coding has been changing. The options are coming, and they're starting to fire on all cylinders. Very excited for that. So yeah, bullish SOFI. That's a wrap. If you enjoyed this content, feel free to share it with your mum, your nan, your dad, your dog, whoever. And I'll see you next time.